not want to miss this episode. We've got stagflation fears creeping into the market, Tesla taking a brutal hit, and major indices flashing bear market signals. Plus, we're breaking down Nvidia's earnings, Bitcoin's latest drop, and the wildest conspiracy theory yet, GameStop x Bitcoin. Buckle up, because this one's going to be good. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate chasing the next 500% gain, or a careful investor playing it safe, we've got you covered. Today we're talking stagflation concerns, Tesla's worst month since 2022, and whether we're slipping into a bear market. Plus, we'll break down Nvidia's earnings, Bitcoin's sudden dip, and the wildest GameStop conspiracy you've ever heard. Let's get into it. I'm your host, Brandon Shar, along with my co-host, Ethan Harris. How you doing, Ethan?
I'm good. I'm great. I got my squats in this morning. I was up at 6 o'clock this morning. Yeah,
Beautiful.
I've been awake for a while.
Beautiful. Just gearing up for another day.
Just chugged in a Lonnie. Thank you, Celsius.
Boom. Thank you, Celsius. Getting our energy up, our caffeine levels. We love it. We love it.
That's
well,
right.
You know, Ethan, markets looked a little red today. I thought I'd put some red on tonight. Very appropriate. It's been an interesting day, really an interesting week.
Yeah, I thought you were doing that just because it was February, but and
Valentine's. No, that would be a more positive occasion. This is a bit more on the negative side.
Could you say that Michael Wilcox is somewhat clairvoyant and that he knew what was going to happen this week?
I will say this. You can say what you want about Michael, all right? Yeah, he lives out of his car. Okay, maybe he steals a couple big gulps in the 7-Eleven parking lot, but that man knows how to read Jerome Powell. And let's just say Michael, he predicted this. Let's just say it. Let's call it what it is. Call a spade a spade.
That's right. Michael Wilcox, senior agent in the field, Twin Cities.
Twin Cities. Represent.
Yeah. But he's wherever Jerome is at. But you're right. It was a bad week. And I'll jump into the housing numbers. We talked a little bit about it. We mentioned it on Sunday that was going to be one of the key reports and key numbers to really look at. And they definitely fell. They fell for the sixth consecutive week. They're now at 6.76%, the lowest since December. This decline is attributed to easing up on the 10-year Treasury yields. And so they've got lower rates, which is helping to increase purchasing power. But we've got home prices that have risen by 3.4%. So there's kind of a wash that's happening there. So rates are lowering, housing prices are going up. And so there's a modest outlook of 4.1% over the next year. Inventory levels have improved. There's a 27.5 increase in homes actively for sale compared to the same time last year. However, going back to it, affordability is a concern, especially for first-time home buyers. And if you're in our generation, that's kind of a common thing that you'll hear is just you can't buy. It's too expensive. And it is very expensive. And so affordability is the number one concern for people of our generation. And then as far as the market outlook, analysts are predicting that homeowners, they may start to resume renovations and relocation plans despite the elevated mortgage rates. So it could continue to have some upwards pressure from consumers, despite the fact that there's still high interest rates and still just high prices all around. So we've got declining mortgage rates, which is a good thing, but houses, they still be expensive.
Yeah, the rates, I mean, it doesn't help a whole lot if, prices are still kind of high. People still are not as eager as they were, a few years back to kind of hop into the housing market.
Yeah.
Um, so yeah, that's kind of it's kind of a red flag, kind of a red flag for the housing market.
I'll always go back to, in I think it was either 2020, maybe 2021, when my wife and I were looking for our first home.
Mm-hmm.
We actually were about to close on a home that we had a 1.75% interest rate, which is just crazy.
Jeez.
And now it's in the high sixes. So it's like,
Yeah.
man, we could have had a whole lot with off our chest with that. Yeah,
Yeah,
insane.
I
That's
I
right.
think I got 6.5. I bought in 2022. Yeah,
Yeah,
so yeah, I definitely missed out on those low rates. We are nowhere near those low rates, and it doesn't look like we're going to be there anytime soon. So,
yeah. And I will note, I forgot to mention this, but existing home sales decreased by 4.9%. And then sales for new homes fell by 10% um, at the beginning of the year. And then active listings, there's a 27.5% increase in active listings. So inventory increased despite uh, those other numbers. So it's interesting. At
interesting.
the end of January, there were 1.18 million unsold existing homes, representing a 3.5-month supply at the current sales pace. So there you
Hmm.
go.
That's your
That's
home
our
update.
house. That's your home update. Yeah. And then we've got some exciting updates. If you want to purchase a home, you need to put your options where your money's at on Nvidia. And this week, we had some Nvidia earnings. They announced their financial results for the fourth quarter of fiscal year 2025, showcasing significant growth driven by strong demand for its AI focused products. Their revenue, 39.3 billion, which was a 78% increase from the same quarter last year.
That sounds great.
Yeah. And then net income, 22.1 billion, up 80% year over year. And then their earnings per share was 89 cents, which was an 82% rise from the previous year. Um, and then they had some segment performance in the data center revenue segment, $35.6 billion, which is a 93% increase from the prior year, primarily due to the rapid adoption of NVIDIA's Blackwell AI supercomputers. Um, and then for the upcoming fiscal quarter, they're projecting a revenue of 43 billion. So slightly above analyst expectations of 42. So they're bumping from 39 to 43 billion. I had puts on them. I have puts on Nvidia. I'm sorry. Um, and despite the strong financial results, there's still volatility.
Yeah.
And there was a decrease of $11 from the previous close. So I still have put down, and we'll review our paper trading update at the end of the show. But um, I still a little wary. I mean, you still got to think about the fact that nothing changed about the fundamentals despite the high earnings. Um, so we'll see what
Yeah, this
happens.
is for those on YouTube. I just pulled up Nvidia's chart, and despite the good earnings, it has not helped the stock at all. Actually, I think that the overall market sentiment, which we'll get into a little bit later, is kind of dragging on Nvidia. But you can see, I mean, this was today. I mean, we opened at 135 and we closed at 120. And
It's
I
a big candle,
think
big red
that
candle.
is a big red candle. And if I'm not mistaken, I believe that Nvidia left the 3 trillion market cap party based off this drop. They are no longer there. So very big drop in. I mean, I don't know what you make of this, Ethan. The earnings were great. I did hear that there were some concerns about the margin that they posted, but as far as like
Mm.
guidance, obviously a lot of their products are hot off the shelves, so to speak. So everything from Q4 sounded good, but this morning when the market opened, I mean, this thing tanked and tanked hard. So I do you feel like that's just overall sentiment from the market kind of weighing down on Nvidia? Do you feel like there's something in the numbers that beyond just the rosy, earnings beat and revenue beat that people missed, that smart money saw? Or do you think this is just speculation on the year out?
Well, what I will say, because I'm always of the belief that I am only as smart as the quotes that I say make me sound.
Hmm,
All right.
that's a good
So
saying.
I'm only as smart as the quotes that I repeat make me sound. And I was reading Techniques of Tape Reading today. It's the book that I'm currently reading. And there's a reference to another book in this book by John McGee in Technical Analysis of Stock Trends. There is territory and there is a map. Are they ever exactly the same? Not really. They might be close if your map is good, but they are never identical. Think of territory as your stock movement. The map is what we think of the stock movement and what we make of it. If all the reasons that traders discuss have nothing to do with stock movement, then what does? The answer is the stock movement itself. This is the only reality of the market. That's why the market is never wrong. The market just is what it is. It does what it does. As a Zen philosopher would put it, the market is. That's all I
Ooh,
got to say about it.
that was very well put. I need to read that
Yeah.
book. Um, yeah, I mean, it is what it is. It's very true. I mean, at the end of the
The
day,
earnings was on the map, but the territory showed that it was red.
yeah. And I just kind of drew out a line here. As far as support goes, really, it's like 114. So we're about 6 points off of, a pretty significant support level on the daily chart. And the scary thing is, we are trading now. We just crossed below today the 200-day moving average, which is a massive, massive, massive level on any chart. 200-day is huge, huge, huge. If you're above it, you're bullish. If you're below it, you're bearish. And yeah, this is the first time this year we've crossed below it. So that
Yeah,
is not rosy as far as an outlook.
there we go. I love it. And then Sugar Booger Mama, she made a point. She said, or you're as smart as you make people believe you are. And boy, you are so good at it. Hmm.
Oof.
Thank you.
Yeah.
Thank you.
Yeah.
Thank you.
I like that
And
too. I'll
David
run with
Wright
that.
popping in with a quick hey, hey.
Shout out David Wright. Thanks for
Yeah.
showing some support. We love it.
Okay. So that was the housing numbers, NVIDIA earnings. Now we got a doozy for you. We got GameStop and Bitcoin. The subreddit Super Stonk, where we get part of our name from Stonkcast. It is the security that's traded on the market that made trading and Wall Street bets and whatnot the cultural force that it is today. So we
Mm-hmm.
always like to get a little update on GameStop. Uh, the GameStop X Bitcoin swaps conspiracy. It's a story of hidden shorts and market manipulation. So there's been a lot of weird, like Bitcoin illusions via tweets that the Superstunk subreddit has been trying to decipher. Ryan Cohen, the CEO of GameStop, did this like retweet of an older tweet, and then he deleted the tweet. And so, of course, that set a lot of people into a frenzy on the Superstunk subreddit where they're trying to say, what does it mean?
He's trying to be like
What does
Roaring
it
Kitty.
mean? Yeah, he's trying to. Which I mean, hey, have you ever seen Ryan Cohen and Roaring Kitty in the same room together? I don't think so.
No, I don't think so.
Um, but there is a conspiracy that I was very interested in, and it's a story of hidden shorts and market manipulation. So let's break this down in a way that makes sense, okay? Imagine that you're a hedge fund that's sitting on a massive short position in GameStop. What's the problem? Retail traders are watching your every move. On the times and sales for GameStop, they're watching you. They're looking at your level 2 data and they're trying to see what you're doing. But if your short interest gets too high, people might pile in for another short squeeze. So you need a way to keep your short position under control without looking like you're shorting GameStop directly. So, what's the theory? Hide your shorts in ETFs. This is called the XRT trick. Instead of shorting GameStop directly, you start shorting something else that holds GameStop, like the Spider S&P Retail ETF or XRT. Since XRT holds a basket of retail stocks, including GameStop, this allows you to bet against GameStop without triggering alarms. So if XRT gets heavily shorted, the whole basket gets shorted, it won't show up on GameStop's individual short interest numbers. You can create and redeem ETF shares at will, making it easier to mask your exposure. So that was another mind game, or something that boggled my mind that I learned this week is that ETF shares can just be created via technical instrument, financial instrument IOUs, essentially, right? So at times, XRT's short interest has shot up way beyond 100%, showing signs that someone is using it to disguise a bigger short position. So get this, Brandon. Using Bitcoin swaps to hold up GameStop's price. Now, let's say retail traders are still pushing GameStop higher. You need a way to suppress the price while keeping the game going. Enter Bitcoin swaps. So here's the theory. Hedge funds and market makers use total return swaps. So basically, these agreements where they trade the returns of one asset for another, and they play a little buddy buddy behind the scenes. They might swap GameStop's performance with Bitcoin's performance, which gives them a way to manipulate price movements. So if GameStop is about to spike, they use Bitcoin liquidity to offset the move, preventing an explosive rally. So Bitcoin's high volatility provides a smokescreen. Big price swings can mask hidden transactions related to GameStop. Now stay with me. This is the end, okay? We're going to drive this home.
I'm
So
here.
by shorting ETFs like XRT and then using Bitcoin swaps, hedge funds may be able to keep their GameStop short positions open without showing full short interest, suppress potential short squeezes by offsetting volatility with Bitcoin, and then manipulating price action while staying under the radar. But why Bitcoin? Because it's unregulated compared to stocks, meaning they can move massive amounts of money without the same level of scrutiny.
It's the Wild West.
It's the Wild West. So, is this really happening? I don't know. There's no smoking gun. The evidence is compelling. You can look at XRT's insane short interest. You can look at Bitcoin and GameStop showing some correlated movements. And you can also watch like the basket stocks, basket swaps. And then regulatory or regulators rarely catch on to these tricks until it's too late. So it could be another loophole being exploited. I would believe it. I would tend to believe it. If it's true, it means that retail traders are still fighting against hidden forces keeping GameStop suppressed. So I don't know. I think it all ties into there's a bunch of material that suggests that much of the market is tied into the short positions of GameStop. And so, if you do believe that that's the case, then it would make sense that these Bitcoin swaps would be happening behind the scenes. Um, I don't really know how it would tie into Bitcoin dropping so much this week, but that's our GameStop X Bitcoin for the week.
Beautiful. Beautiful,
Yeah,
beautiful. I love a good GameStop conspiracy theory. Um,
yeah.
yeah, this is
It keeps
GameStop
me
on
alive.
the it keeps you going. It keeps you going. Yeah, this is GameStop. If you're on YouTube, this is the chart, the daily chart. Unfortunately, over the past couple days, this also trended below the 200-day moving average, which I think is going to be a common theme for a lot of equities over the coming months. It's the first time it's been below the 200-day moving average since about April. So it is looking bearish, unfortunately, Ethan, if we're just looking
Yeah,
at it objectively. Um, and if what you say holds any value, if it is in fact true, um, if you're short on GameStop, this is a beautiful chart for you,
yeah,
because it's looking a little weak.
yeah. And I think that's a tangent that I'm just thinking of is that um, puts are not bad. They're not evil. Short positions are not evil,
No,
just like calls are not good. And I think that a lot of newer investors, I wouldn't really call them. If you're really like into options trading and you've only been trading for the past couple of years, you're probably more of just like
long.
a graduate. Yeah. Well, I was going to say a graduated gambler, and so
Yes.
you want to evolve past that into someone who is an investor, and or a trader,
Yeah.
because I think that there you can make a distinction that those are two individual like um, uh, um, what am I trying to say? Those
They're
are
two
two
separate
individual entities. They
possibilities.
can have
Yeah.
some crossover. There's a Venn diagram there, but
Yeah.
anyways, because of GameStop, because of I mean, there was market manipulation. Robinhood did stop the ability from buying and purchasing shares, which,
Oh, they
it's
did.
been gone over there. That is a concrete, moment. There's a lot of speculation outside of that, but if you're coming from that world, I think a lot of people in that demographic look at like short positions as wrong, um, and it is not. So you can have a short position in GameStop, and you're not a evil person. You're just somebody who is vibing with the market.
It's
You're
the
walking in the territory.
it's the ebb and flow of the market, right?
Yeah,
I mean, there has to be somebody to push down astronomically
yeah,
overbought stocks, and there also has to be people to push down companies that have no business being in the market because they're, sketch or they have bad fundamentals. So there's definitely a place for shorts. There was a time in my young trading career where I was that person who thought, oh, anyone who's shorting a stock is just this evil individual. It's an evil endeavor to try and short or buy puts. And it's silly. It's nonsense. It's immature thinking as it relates to the market, quite
mm,
frankly.
yeah,
There's definitely a place for it. And, but then there's also nefarious cases. And Ethan and I have, seen a lot of that over the past couple of years too. So, I mean, there's definitely both. Definitely both.
yeah.
Awesome.
And then I'll wrap up with Bitcoin. Bitcoin this week has experienced a very significant downturn. Its price fell below 900 or 900, gosh, 90,000 for the first time since November. Um, and so, just a few weeks ago, we were thinking, hey, is this it? Is this the high? Are we going to be touching heaven's gate? and not the cult. But we dropped off. We had a severe drop. Some things that contributed to that probably has to do with some of the continued tariff announcements. So investors are probably seeking some safer investments and moving away from the volatile markets like cryptocurrencies. And then there was a significant breach with the Bybit exchange that resulted in a theft of approximately 1.5 billion in ether. So that raised concerns about security of digital asset platforms. So obviously that's connected to Bitcoin. And then there's some regulatory delays. So despite some initial optimism, the anticipated pro crypto policies from Trump and his administration have been slower to materialize than expected. So some of that uncertainty, lack of confidence is probably contributing to the market's downturn. But uh, like I said before, there's fundamentals. There's, trying to time the market by looking at the psychology of the market, since the market is made up of people. But, you know, like I just quoted earlier, the market just is. And so you look at the numbers and you can try to define the territory or with a map. But otherwise, you're just kind of trying your best. But
Yeah.
hey,
And
that's what I got.
no, we love it. Thank you for that update, Ethan. Uh, just as a quick check on the chart for Bitcoin, this is actually Bitcoin futures, but we can kind of use it as a gauge. We have this little gap, if you see in the chart here, where it kind of like gapped up a little bit, at least according to the Bitcoin futures. But basically, the big idea here, I don't see support for Bitcoin, major support, until like 75,000.
Yeah,
And so we've kind of been in this free fall ever since hitting that high, the all-time high back in early January. And so yeah, we talked about this before, Ethan. Bitcoin, crypto in general, was supposed to be, the idea behind it was supposed to be a hedge against the market, but in
right.
reality, it runs in tandem with the market, and I would argue at an accelerated pace. And so, the
Yeah.
market's selling off, and you're seeing Bitcoin do the exact same thing a bit more aggressively. So I wouldn't be surprised to see it come down to 75. What do you think?
Yeah, I don't know if it'll drop that far, but I think it'll definitely. Let's see what we're looking at right now. I mean, I think it'll drop beyond 80, but you had a nice bounce,
Yeah.
and I was trying to look at my chart, but it's not as nice as yours. But
Well,
yeah,
in either case, it's been weak. It's been weak the past couple days,
yeah,
and there's definitely selling pressure. And I've always liked when people are like, "Why is it going down?" Well, it's very simple why it's going down. There's more sellers than buyers. Like
yeah,
that's why anything goes down. So yeah, you have a lot of people that are concerned about the current state of things and the stock market and the markets in general, crypto and equities. And there's a lot of money being funneled out of equities and crypto and looking to go to safe havens, which we'll kind of get into that. But all right, well, moving on to the next thing here, we're going to talk a little stagflation. A lot of people have heard of inflation. Not a lot of people are familiar with stagflation. So stagflation it's basically a combination of three negatives. So slower economic growth is one. You also have higher unemployment rates in general, and then higher prices, right? So those are kind of like the three perfect storm situations that can create fears of stagflation. We haven't really had a significant period of what most people would classify as stagflation for quite some time, actually, since probably the 1970s. Um, but there have been some news articles coming out over the past week how there are some fears about it. because if you take all three of these things separately, they are all things that we're kind of dealing with right now. There is slower economic growth. We're seeing that with some of the reports that are coming out. We've seen it with especially guidance, right? So when we get these earning reports from companies and they're like, hey, we our earnings per share went up, our revenue went up, great, that sounds awesome, what else you got for us? And they're like, our guidance for the following year, we're kind of tuning that down. Oh, hey, wait a minute, buddy, what do you mean you're tuning that down? So we're seeing companies being a bit more conservative with their outlooks for 2025 in
Yep.
particular. And so slower economic growth on a macro level is contributing to that. And these various companies, especially the large ones, are noticing it. So you have that. You have higher unemployment. Um, we had a higher unemployment number than expected that came in this past week, and then higher prices. So we all know that inflation has been high. We talked about eggs and how Ethan and I love our eggs, and the
Got to
price of
get
those
big.
have, yeah, and the price of eggs and everything else obviously has been elevated for some time. It's been an ongoing battle for Powell and the Fed to combat inflation, has kind of been the running theme for the past year. So you have these three things combined. It's not good for the market. This is a combination that it's not supposed to occur, because the logic of economics, basically prices shouldn't be going up when people have less money to spend. That's not how the economy is going to function. Generally speaking, in a healthy market, prices should naturally go up when people have more money to spend. But hey, if there's less money out there, we talked about the housing market, less people are feeling gung ho to go out and buy a house, um, and prices are still climbing. It's something's off there, right?
Yeah.
And so we have these fears of stagflation that are kind of arising out of the woodwork, and it's putting some pressure on equities. It's putting some pressure on the market as a whole. Um, so that's stagflation. We'll continue to pay attention to it. It's not great for the economy. Again, we haven't had any significant stagflation in my lifetime, not since the 70s. But before I move on from this, Ethan, do you have any thoughts on that or anything that stands out to you about some of those reports that have been coming out?
Um, the only thing I was thinking about was the purported $5,000 stimulus check from Trump, and how uh, I've seen like the meme go around a couple times about it. But if that became a reality and that was something, then that would definitely blow stagflation out the water, and we would be looking at inflation a couple months to a couple years later as we would deal with the fallout of that. But it's also interesting that we're entering uh, a period of stagflation with you know tax returns and whatnot coming back. But I'm sure that, I mean, tax returns and whatnot can't really put a dent in that in just like the month, where you could probably see some like consumer spending or whatever. But um, yeah, sucks.
Yep. It's not a rosy situation there. As if, battling inflation wasn't enough. Now we got stagflation. So we're just kind of adding to the pile there. So that's your
Yeah.
stagflation report. Again, if you want to look it up for yourself, just type it into Google. There's been plenty of articles coming out lately as it relates to the market and how it could impact it. But moving on, we're going to talk a little Tesla. So Tesla has been
Mm.
one of the hottest stocks, one of the hottest names over the past year. I can tell you from a not so much an investor but a trader standpoint. Traders either love Tesla or they hate trading it. They won't even look at it. Some people have been burned very hard on it. Um, Obviously, with the election of President Trump back in November, Tesla was on a freaking tear. The bulls were living it up, buying Lambos. Things were going great, all up until a couple weeks ago when things started selling off in the overall market. And Tesla is what you would classify as a high beta stock. So you basically have, just to kind of break that down briefly, stocks that run in tandem with the S&P 500, with the overall indices, right? If the index is up 1%, let's say, and another stock is also up 1%, you would call that a beta of 1. If you have the S&P 500 up 1% and another stock that's up, 5% relative to that, it's a higher beta stock, beta 4 or 5, whatever. It basically just has more movement relative to the market. Tesla is a very, very high beta stock, very high. And so when the market's weak, Tesla's even weaker. When the market's strong, it's even stronger. And we've seen that play out over the past quarter with, again, the election news and whatnot. But as of lately, Tesla has not been doing great. It's on pace for its worst performance monthly since December of 2022. Basically, shares of Tesla are down more than 40% over the past month or so.
Mm.
And really, according to Seeking Alpha, it's really a perfect storm of events that's kind of fueling this drop: deteriorating profit margins, political controversies impacting demand, the nonlinear path of the business transformation, and then stiff EV competition, all rolled into one, is really impacting Tesla right now. And release of autonomous vehicles, humanoid robots will eventually transform Tesla's business, they say, but investors should base judgment on data, not promises, which I can 100% agree with. Not to mention the fact that it's still valued at over 100x its 2025 earnings. Just
Mm.
dwell on that for a second. 100x its earnings. Just to put that
So
in perspective,
price correction is expected.
is expected. Exactly. I mean, just to put that in perspective, a good PE ratio, price to earnings ratio, is typically like 20. I think we've covered that in the past, like 20 to 25. You're going to be hard pressed to find anything lower than that usually. But that's about average. Now, obviously, Tesla is a growth stock. It's a tech stock. Those generally have higher price to earnings ratios, but 100x is just ridiculous. So it's very, very high. Tesla stock is still not attractively priced according to Seeking Alpha. So Tesla it's having a rough go. If we pull up the annual chart here, the daily chart for Tesla, you can see for yourself that we have been sliding down.
Mm.
The Bears have been having a field day. They're just having loads of fun out there. This thing was at 488 back in early December. That was kind of the peak of it. And since then, we're trending down. We've been selling off hard. We've actually had, Ethan, 1, 2, 3, 4, 5, 6, if I can do math. Yes, 6 red days in a row on Tesla. So it's not finding any kind of support. And again, the overall market is down, and
Nobody
that's
wants to
been,
buy it.
nobody wants to buy it. Nobody wants to buy it. So I have some support marked out here at basically 270. It was resistance back in July of last year, also in October, and then briefly in late October as well. So we have these 3 touch points on the chart that were resistance, and we're praying that that turns into support now. That's typically what happens from a technical analysis standpoint. Resistance becomes support, support becomes resistance, right? So um, now the interesting thing with Tesla, Ethan, the 200-day moving average, again, it's very important. I don't like to look at it on lower time frames, but on higher time frames like the daily chart on the year, it's huge, right? It's
Yeah.
something that investors are paying attention to. And as you can tell, we are creeping up to it. We almost touched it today. It's currently at 278 and the stock is at 281. So it's not looking great. Not looking great for Tesla. Um, if this thing, the thing that I think is really interesting is if we get some more negative economic reports coming out tomorrow, which we'll cover later with PCE, and the market just gets the floor taken out from under it, I mean, we could see a bloodbath on Tesla, in my opinion. But what are your thoughts?
Um, the 200 moving day average is the yellow line. Is that
Yes,
correct?
sorry. Yeah, let me clarify. So there's a lot
Yeah.
of moving lines here. Don't pay attention to those. Right now, what's
Gray
important
on
is the
colors.
yellow
Yeah.
line. Yep. Yep.
Yeah.
That's the 200-day moving average. And yeah, we're
Okay.
coming up right to it. So,
And so is that typically used, like in this case, would that be used as like a level, like a floor, a level of resistance? How would you um,
yeah. So,
use the 200 moving day average in this case?
yeah, great question. So, just as a quick rundown, the white line is the 50-day moving average. The yellow line is the 200-day moving average. Typically, when a stock crosses below or above the 50, it's indicating that there could be a change in the direction. Now, if a stock is above or below the 200, that's the last line of defense. Hey, we are for sure switching into a new regime in the market, whether it be bullish or bearish. So if I was, trading Tesla, what I would be looking for, first of all, is to see how we react to that 200-day moving line. I could
Mm-hmm.
see a scenario where, we cross below it midday and then the bulls step in, buy it up, and then it just kind of hovers right at that line or maybe right above it to end the day. And then the
Right.
next day, would be kind of when I would get in. So I wouldn't be looking to touch it if I'm, using the 200-day moving average on the same day that it's interacting with it. I want to wait a day and see how it reacts. A good example would be back here in July. So as you can tell here, it kind of crossed above the 200-day moving average. And then the next day, it
Mhm.
was confirmed with a huge jump. And then we had this massive follow through for the next 5 days, right? So the same thing could happen, but to the downside. Um,
Okay.
I I don't foresee the 200-day moving average in this scenario as being like the thing that saves the bulls. I think
Right.
it's going to be the thing that confirms for the Bears that hey, it's time to get in. So I anticipate it puking below that and continuing on a downward trend along with the overall market. Ethan, I don't see an environment where
Puking
Tesla
bull.
is green and the
Right.
market is red. I don't see that. So um yeah, that's what I would be paying attention to. The 200 day is a big deal. But it looks very bearish right now, and any kind of trades that I'm taking intraday on this, I'm making sure that I'm aligned with a higher time frame. So the higher time frame, as we can tell from this chart, is bearish. So on an intraday level, I'm waiting for pops and then looking for confirmation to continue with the trend. The trend is your friend to the downside.
Mm.
So
Trend is your friend. I like that.
trend is your friend.
One thing, just to mention that you use this terminology a lot, and that's bullish and bearish, and uh, it's kind of ubiquitous to describe what the market is doing. And I saw a a short the other day that explained this really well, because even me, sometimes I would think, bull, is that good? Is that bad? Bear, is that good or bad? I can't remember. But this girl was describing that a bull market, you've got your horns that go up and the bull is attacking up. So your price is going up. And then a bear market or bearish is a bear that's about to pounce down on you. So you're going down, pouncing down. So I just thought that was interesting, and something that like really worked with my small pea brain.
I liked your bear there. It's
Thank
definitely
you.
definitely
There's
sticks in
also
the brain.
there's a question. What's an update on the crash and burn of the EV stock? Talked about a couple episodes ago, and that's in reference to Nikola. So they were once a prominent player. in the electric vehicle industry. Officially on February 19th, they filed for Chapter 11 bankruptcy. And as part of the proceedings, they plan to pursue an auction and sale process under Section 363 of the U.S. Bankruptcy Code, aiming to sell its assets to maximum value for stakeholders. So they have approximately 47 million cash on hand to support these activities. So obviously, if you're watching, you can see their stock has had a tremendous decline.
New 52
Yeah,
week low today.
yeah. So
It's all downhill from here.
it's all downhill. I mean, what was the low? Is that 17 cents?
17.175, 17.5. Yes.
Yeah.
It's
So
very low. Yeah.
for less than a nickel and a dime. Well, for a little bit more than a nickel and a dime, you can get your own share of a dying company.
Yeah.
Um,
And surprise,
yeah,
surprise, the Bears are still riding this puppy down, and they're winning. They're winning pretty handsomely, I would say. So yeah, that's Nikola.
how did it affect GM? It didn't affect GM. Nothing really. Yeah,
Oh yeah, that's a good question because I know we mentioned they had a partnership with them.
yeah.
Um, I don't know the financial impact as it relates to the Nikola partnership that they had, but I mean just on the surface level here, I mean it's not looking great. It's below. This is also below the 200-day moving average, and you can see here, Ethan, this one went below, and then it retested it, and it
Mm.
failed, and now it's
And
just
then
continuing
retest
to
it again. Is that what that looks
retest.
like?
Yeah, I had this wick up. This is super, not to get too technical, but this is super bearish right here. When you get a wick up like this, and then it just totally gets rejected, the bears hop back in and push it back down. That's not
Yeah.
great.
We'll go
Um,
into to candles and wicks in another episode, but
we
um,
yes,
it's a very
all right,
it's a very interesting analysis. But yes, let's keep
it
rocking and
is.
rolling.
Let's keep it going. All right. So moving on, we're going to talk just the overall market sentiment as it stands right now. And we have some news factors that are kind of contributing to it, which we will get into shortly. But first of all, I just want to give a brief overview of the overall indices and kind of where we're at right now. So Ethan and I have been alluding to over the past couple episodes, and Michael Wilcox, shout out Michael, the potential, right? The potential, not the guarantee, but the potential for a bearish market. And there's been some signs that would point to that. So one of the first things, Ethan's bear sign is great. Basically, when you're dealing with a bear market or the potential of a changing regime in the market from bullish to bearish, there are some signs that'll kind of stand out to you at first glance. One of the first things to go when you're heading into a bear market is going to be small caps. Small cap stocks, lower, market capitalization companies are not going to hold up as well. That's going to be the first sign. So first of all, if we pull up IWM, this is the Russell 2000. It tracks the 2000 smallest companies in the market. This, as you can tell from this chart, looks very, very ugly right now. We
Oh
broke
yeah,
clearly below the 200-day moving average, and it's a freaking nosedive right now, and there's really no telling where it's going to stop. I mean, maybe 200 being a psychological level, but I don't know. But right now it's very, very bearish, right? And this is something that, you could have spotted back here at the 50-day moving average when we had this massive red candle and then it failed to get back above that and stay in this like bullish territory. And now we've successfully gone below the 200. So that's the first thing I would be looking at is the Russell 2000. Hey, what are small caps doing? Not great. And then if we look at the Qs, right, the NASDAQ, this is the thing about the NASDAQ is there's a lot of money flowing through the NASDAQ. I believe it's the most liquid indice
Mm.
The NASDAQ exchange has the most money on it. It is very tech heavy. And so you get some pretty outsized moves on it when it does move because of that cash flow, right?
Right.
And as you can tell from the tech heavy NASDAQ, this too has now broken below the 50-day moving average and is quickly approaching the 200-day moving average, right? So this is also not looking great from a macro standpoint. So we got small caps down, we have tech down, and we saw an example of one of the larger holdings in, just the tech space. I mean, we can look at Nvidia, we can look at AMD. We saw Tesla down. Tesla's in the S&P, but just overall tech sentiment, it's not great right now. So this continues to trend lower. And then we can also take a look at the S&P 500. The thing about the S&P 500 is it tends to move a bit slower, I would say, than some of the other indices. And the reason for that is because you have some more defensive sectors, defensive stocks that are in the S&P, right? So things like energy, for example, energy tends to hold up the S&P 500 relative to the Nasdaq or the Russell. If those are down, yeah, SPY's probably going to be down too, but not as bad because you have some of those other sectors that kind of prop it up a little bit. Typically, the defensive sector, energy, materials, things like that, they don't do as bad in a bear market, although they still, struggle.
Right.
The reason for that is because basically you still need energy. People still
Yeah.
need utilities in a bear market. So there's certain staples, I guess you could call them, Ethan, that even in a bear market, people are still going to need. That's all part of the S&P, and therefore that's why we see it down, but not down as bad as maybe the Nasdaq. So
Yeah.
um,
Would
it,
healthcare be another like kind of defensive position to have?
yeah, I that's a good question. I would say, in my humble opinion, probably so. If we look at healthcare, where is it at? XLV, right? So if we just kind of flop through some of these charts, you're going to get a mixed bag. But J&J is one of the larger components of the sector, and it looks pretty good right now. So I think it's probably fair to say that ABBV also holding up pretty good, and then ABOT also. So yeah, I think that would be somewhat fair to say. Another one would be, yeah, like we talked about, energy is going to be another one. There's, if you look over here off to the left, this is the percentage change for the day of a bunch of different stocks within the energy sector, and there's a lot of green here. So I would say that's fair to say. Um, but obviously things like communication, technology, discretionary, especially, right? Those are going to be areas where you're going to see more red than green when you're in a bear market. So
Hmm.
um, so yeah, so that's a quick rundown of the indices. I mean, the Nasdaq alone today, Ethan, almost down 3%. That is a massive, massive move. It's at the key level 500 right now. And then lastly, let's take a look at VIX. Right, we've been talking about VIX for a while now, and if VIX is above 20, then something's wrong. There's a lot of fear on the market. And as you can tell from VIX, we've had a few days now where it's been creeping on up there, and it's currently sitting at 21.13. Not a good thing at all for the market. And even more detrimental is the fact that VIX today alone was up 10%. That is not a move that you should see in VIX in a day. VIX should not be up 10% in one single day. So that is a huge red flag for the market right now.
Hmm.
So,
I when you went to the healthcare sector, one thing that I was thinking about, and this is controversial. It's controversial, I suppose,
lay it on
but
me.
on 4chan, my source of choice. Um, I saw a thread that was referencing a tweet. All right, so we're at what's that? Two levels of abstraction, um, where the tweet was stating that Yale had performed a study on those who took the COVID vaccine, and they had a post like COVID syndrome, something like that, that mimicked HIV/AIDS. And I thought the other day,
Ooh.
what companies in the healthcare sector have the most HIV/AIDS like therapy exposure? And I thought maybe we should put some calls on Johnson and Johnson.
Yeah, well, based off that chart, it went. I mean, the chart's very bullish right now. So yeah, I
Yeah,
wouldn't be opposed to that. That might be a play for the Stonkcast portfolio there.
yeah,
I like it.
yeah,
Um, yeah, so we obviously just ran through the market on a macro level. It doesn't take a genius to see it's very red. There's a lot of selling happening in the market right now. It's very bearish. Part of that, part of what's driving that, beyond stagflation concerns, beyond inflation, economic reports coming out a little too hot, not as good as we would like. In addition to that, according to CNBC, Trump says Mexico, Canada tariffs will start March 4th.
mm.
And here's a doozy that the market wasn't expecting. We know the market loves to anticipate things. They don't like being surprised. Kind of like me with my kids. I don't like getting surprised. Um, on March 4th, plus an additional 10% on China. So Trump
Wow.
Trump told us a month ago, if Mexico and Canada played ball and they helped at the border, that he would hold off on the tariffs. He gave them a month, and they didn't do what he expected of them. And so, because of
Yeah,
that, now he's going to be a man of his word. And we kind of talked about it a month ago, actually, about how, hey, they're going to be paused for a month after a month. I don't know what's going to happen. He could put them on, he could not. But he is most definitely putting them on. He's going to move forward with it starting on March 4th, so as early as next week, plus an additional
next Tuesday.
10% next Tuesday, and an additional 10% on China. So, if I'm not mistaken, China already had 10%, and Trump is doubling down like it's at the blackjack table, and he's slapping another 10 on them. And he was also floating around this week ideas of putting tariffs on the UK as well. So it's an all-out
Yeah,
trade war, um, creating a lot of uncertainty. What do you make of that?
I think what's probably going to happen is that there's going to be some like volatility on Monday, because maybe the market's going to be like, hey, is will he, won't he, what's the deal? But then Tuesday will come around, and Tuesday you'll have um, he'll do what he said that he was going to do. And I think that the market will probably correct itself and kind of go about its daily business. It'll get priced in.
Yeah.
That's my thoughts.
Well, and the only thing I can think of, right? I think most of the smart money anticipated these tariffs coming. If there is one thing that I think smart money, or anybody for that matter, didn't anticipate, was an additional 10% slap on China.
Hmm.
China being, of course, a very big, trade partner for the US. And so I think that kind of throws, going back to Nvidia, right? That was one of the things in the earnings report that I think a lot of people wanted questions to. How are the tariffs going to impact Nvidia? Nvidia being one of the largest companies in the market,
Yeah.
that's very important. How is that going to impact their business? So an additional 10% on China is massive. And here's a direct quote from Trump. He said, "We cannot allow this scourge to continue to harm the USA, and therefore, until it stops or is seriously limited, the proposed tariffs scheduled to go into effect on March 4th will indeed go into effect as scheduled." Unquote. So that's kind of where we're at with tariffs. And I did see that Canada basically said, look, if Trump imposes these tariffs on us, we will have swift action
Hmm.
back at the US. So it doesn't seem like this trade war is going to end anytime soon. So
Yeah,
that's kind of where we're at with tariffs.
I like it. Well, should we use that to transition to our paper trading account?
Yeah, let's go take a look at the port, see how we're holding up. I can already tell you how Celsius is looking. Not great. It did exactly what I think I said on the last episode was in the short term, it's going to pull back a little bit, but then it would go up. It hasn't gone up yet, but it definitely did come down as we thought it might do in the short term. But again, that's why we got April calls.
Yeah.
We're buying some time there, so I'm not worried about that position right now. It was also only 2% of our entire account. How's Nvidia looking though, Ethan?
So Nvidia, the position's looking pretty good. We're in the money. Hey, oh, we're in the money.
Heyo, love that.
We
ITM.
always love to see that. And so I'm honestly thinking that I sell half. I've got 10 contracts right now. So I'm thinking about selling five, trim off a little bit of profit. And then I've got 22 days left until I think it's 22. Let me see here.
Yeah.
Yeah, 22 days until they expire. So, oh yeah, I see it right there, 22. And so I think I will probably trim off. I'll watch tomorrow, um, and we're
Trim off
trading
half.
at 120. Um, so I'm thinking if we see a ceiling tomorrow,
We got
and it
PCE.
bounces off, yeah, and it bounces off, yeah. Then we'll probably confirm that ceiling, trade or sell off five, and then hold on to the next five to see kind of how tariffs shake it out.
Yeah. No, I like that. I think it's a good idea to, always have a plan, right, for how you're going to take profits, right? There's a lot of different strategies, but when you're holding multiple contracts, the most successful traders sell as they go. It's not all at once, right? But as profit is being taken on with a position, it's always a good idea, in my opinion, to trim your position, lock in profit, move up your stop loss, and basically have what you would call a risk free runner. And I'm sure at some point down the road we can do a full breakdown if people want to of some different strategies on how to manage positions that are on. But I like it, Ethan.
Yeah,
I think we're sitting pretty there with over 100% up on the contract. So great call by you on the Nvidia puts. It was a good move. Um, and yeah, I think we should take some profit there for sure.
what's your
Um,
Celsius take?
Yeah, so Celsius, Thinkorswim paper trading, this is really funny to me. They must have a glitch or something. I don't understand this. They're saying we're up on the position 3,500, but I can clearly tell that the cost of the position was 4,000 and the net liquid value of it right now is just over 500 bucks. So definitely not green on the position. It's a very small position. Again, this was only 2% of our entire account, so I'm okay with taking a little heat on it. Again, we have until April on this. I'm not really worried about theta on the contracts until we hit like a month out. We still got 49 days. So I say we just let it ride for now. I'm keeping an eye on it. Obviously, the market overall isn't helping Celsius right now, even though they had a good earnings report last week. But let's let
Yeah,
it play out for now and see if it bounces back for us.
yeah. And tell
Um,
us PCE. Let's hear
yes.
that. What we got going on?
Yeah, so tomorrow, Tomorrow we have the PCE report coming out. We talked about this last episode. This is a very, very important metric for the Fed. It's their preferred inflation gauge. And this is going to have a significant impact on what Daddy Powell decides to
Hmm.
do in March when it comes
Boss
time
P.
to when it comes time to either make a rate cut, leave it the same, or entertain raising it. So we get core PCE index is coming out tomorrow morning, 8:30 a.m. Eastern time, and the whole market's going to have eyes on it. Right now, the forecast for it is 0.3%. The previous was 0.2%. So they're already predicting a little bit of a raise in this, but if this thing comes in hot, if it comes in over that 0.3%, I'm expecting more selling pressure. Honestly, worst case scenario, I'm expecting the floor to get taken out from the market tomorrow if PC, for whatever reason, comes in extremely hot. But if it comes in as expected, or a little bit lower, that could be a nice reprieve for the market and might be an opportunity on an intraday level to play some calls or up on the bullish side. So, but that's tomorrow. Pay attention to it. It's going to be big. So we'll see what happens.
I love it.
All right. Ethan, I think that's about it. You got anything else?
No, nothing else. Just make sure that if you, I know that we had a couple people mention that they wanted to get involved with like paper trading in the last episode. So if you did, leave a comment on the YouTube video whenever it gets posted and just let us know what platform you went with, if it was Webull, if it was Thinkorswim, and just let us know what trade you put in there. Did you take your entire portfolio and put it into GameStop? Did you put it into Tesla or Nvidia? Let's hear it. Yeah, and I think I was reading a lot about people who they use their paper trading accounts, and they're like, "Man, I can always blow up a paper trading account and take that thing from 100,000 to 1 million, but as soon as I get into my like actual account, I blow it up, and it's because of emotions. That's why you get
Yeah,
too emotional with stuff.
it's a little different when you got real money on the line. That's for sure. I've done a few
Yeah,
paper trading accounts, and it does not feel the same when you take a loss on that versus your live portfolio. So, but it's
yeah.
still good to test out strategies. So,
Hmm.
yeah. All right. Well, as always, please like and subscribe if you like what we're bringing to the market here. We are on iTunes, we are on Spotify, Amazon, wherever you get your podcasts. Please follow, leave a comment, definitely helps the show. We will be back ready to go on Sunday. We'll see what the market gave us the last day of the week. And we'll talk a little bit about what we may or may not add to the paper trading account and what to look forward to in the first full trading week of March. But as always, signing off for Ethan and myself, remember, plan the trade and trade the plan. Have a good night, everyone.